All right, sorry about that, Jared. Okay, so
Yeah,
price
no
going
problem.
down is being generated by news that creates the price to go up or down is either creation of supply, right? Or price to go up is creation of demand. That's basically it. And then simply candles dictate or create the formation or candle formation is being created through supply and demand, like in regards to a picture driven. So let's take this as an example. So if candles create a picture, so if this picture is being shown as what type of candle is that?
Gravestone.
Yeah, and the picture is a gravestone doji. Question now is, what is a gravestone? Based on price,
Supply being created.
supply being created. So in here you have um, in terms of the balance of force between buying and selling, there's more selling pressure than buying pressure. Would you
Hmm.
agree?
Yep.
Okay, so if there's more selling pressure than buying pressure, in other words, demand is decreasing or buyers are not as interested, but sellers are pushing the price to the downside. Um, and then let's look at indicators. I'll put it right here. Indicators. What are indicators? Indicators are calculated price points. I guess you can say that.
Hmm.
Indicators indicate,
They're like derivatives almost, or price is a derivative of the indicators.
exactly. They indicate potential direction where price is going to go. That's what it basically does. So if it's an indication of where potential direction of price, but the question is, how do they operate? They operate through mathematical mathematical calculation using price. That's basically it, right?
Yep.
So if it is a mathematical calculation using price, then is it lagging or leading?
Lagging.
Exactly. So therefore, lagging. Hence, if it's lagging, then who has hierarchy? M1
Price does.
or M3?
M1.
Exactly. So if M1 is purely on price, then it has hierarchy. Therefore, just because the price is above the 8 of the 10 doesn't necessarily mean that it could potentially go up unless you really read it as, okay, there's the gravestone doji, sellers are pushing the price to the downside, and hence also price follows trend. Then trends based on price have hierarchy, or price based on trends, not trend based on price. So price based on trends have hierarchy. Hence, the continuation where the price now be below the 8 to 10 is just simply confirming that is a potential change of trend to create a lower low, which it did from a lower high to a lower low before it came back up to create a higher low and creation of higher highs, higher lows, higher highs, higher lows, lower highs, higher lows, higher highs, lower low, higher high, which is also a higher low. So to answer your question would be, it is imperative for you as a trader to define which one's which first, indicator or price. In this particular case, price, even though the closing price is saying, hey, look, the price is still above the 8 to the 10. However, there's selling pressure to the downside based on the trend. That there's a potential it could easily go below the 8 or the 10 once again, unless it is a different type of a picture of the candle. In other words, something like this. It could be a doji, but we can also argue, say, well, there's also this, where it's a gravestone doji, where there's a higher high, there's a higher low. So it only worked out after another consecutive candle, basically. Then it basically dropped from a lower high. And so if it's a higher high, different story. But if you have a lower high, then you have to reconsider either getting out or shorting it. But if you choose to hold it, then the question is, either you're going to reduce your position size and increase your stop loss to a spot where it would potentially not stop you out, or if it goes to outrule, you're definitely out and should just short it. So it's giving you all that options. So good, another example would be if you go to Euro US dollar for me, please. Same thing, we can also argue here. You have a gravestone doji. Gravestone doji at a level of demand then. So with a gravestone doji at a level of demand, and then you'll have to say, well, the price is below the 8 to 10. The price is below the 8 to 10. I have a higher low over here. And then I have a bullish candle over here that has a high, like the upper wick is pretty wide. Upper wick is pretty wide. So you have two uncertain candles, but the price to below the 8 to the 10. So if you get rid of that, or you put, if you have a tab with no moving averages, clear, and then you can see it very clearly that, hey, look, I have a clear cut of a higher low. I have now a higher high right there. So it's confirming from a higher low. We have a bullish candle. They retested the price back to the low of supply. They didn't want to. They're waiting for some form of news. What it be? Maybe not ready yet. And then now you have a very bullish candle basically from there. So if you're entering from here, and then you're seeing that Friday, oh, I have a gravestone doji. There's uncertainty. Shall I get out? Shall I buy more? Or shall I hold my position? So those are your three decision-making process, right?
Mm-hmm.
Shall I get out? Shall I buy more? or shall I hold, or even shall I reduce my position size? That's basically the combinations that in terms of choices that a trader has to make. So one, since we are different from other people, we have a clear cut of a higher low. Would the question now is in terms of the being component and the mental conditioning component is to believe is to have confidence in oneself and trust of oneself, trust that this is going to go up based on the higher low. Does it make sense there, Jared? So
Mm-hmm.
it has to come from within, in the inside, to have that confidence, to trust oneself that this higher low will work based on the knowledge or the methodology that basically we use. So if you can have that, then definitely what choice will you do? Either one, hold your position,
Mm-hmm.
and then if you have intuitive process that it's going to go up, that increases the level of confidence, then you will buy more. Buy more or hold. Those are the only two options that you'll have based on confidence and trust. But if you don't have the level of confidence or trust, believing that this is not going to work because the emotion of uncertainty comes into place, when the emotion of uncertainty kicks in, what is the end result? The fear of losing.
Mm-hmm.
So when the fear of losing happens, then what would the reaction is going to be? What would be the choice out of those four?
To close.
To close the position, um,
Or reduce.
or reduce the price, basically, reduce the position size. So those are the only two ones. If the emotion of fear is too strong, then the person definitely will close it, especially he or she is experiencing anxiety.
Mm-hmm.
I don't know, I'm gonna get out. However, if the level of fear is medium, then that person will do what? Reduce the position size because if they're aware, okay, I'll reduce the position size because I'm not willing to risk rather than 10%, I'm only willing to risk now 5%, then they will reduce the position size to gain the confidence of the certainty, security, and they will buy more today in terms of the current candle because there is now a certainty that the price is gonna, based on a bullish candle, there's more force. So there's a probability that it will go there or beyond there to create a new higher high. Somewhere sometime in the future, of course. So based on that, to answer your question, price will always have hierarchy compared now to an M3 methodology. So you have, based on this, uncertainty, gravestone doji, selling pressure to the downside. But what is keeping this not as strong is because of the higher low. Now, if it's a lower low, then it's a different story where you have a gravestone doji. This won't be bullish. This is going to tank to the downside. That'll be bearish. Almost guaranteed that it'll do that. Right? So
Mm-hmm.
another example would be this one. You have a gravestone doji following a bearish candle. This one is a gravestone doji following an uncertain candle with a bullish candle that has higher low. This, you have a gravestone doji followed by a bearish candle that is followed by a lower high, two lower highs in a row where the trend is to the downside. This is different. Followed by a higher low, then you have a higher probability that it would potentially head to the upside.
Got it.
Right? So that's here. This is also very uncertain because you have a very bearish candle right there. So in order for this to really go up to the upside, imagine the amount of force that it has to lead to the upside based on a downtrend that have a very bearish force. In order to create a higher high right there, a minor higher high with major lower high, but it's creating either this is a major higher low, or it could be a minor higher low somewhere sometime in the future. But for now, they need to head back from that side after how many days or how many candles of it attacking to the downside. Everything back from what they gained,
6,
right?
7, 9 total or 8.
Yeah, 8 candles in this particular case, in the time frame, 8 trading business days. That's 2 weeks, basically, almost 2 weeks. So after 1, 2, 3, 4, 5, 6, 7, 8 to the upside, 8 to the downside, and no one's willing to go below that low. So here is pretty even. 1, 2. It took 1, 2, 3, 4 days to eliminate 1. That's why this force is way powerful compared to here. Just imagine the amount of buying pressure it has to do. At the same time, they gave everything back is what they've gained. But when they gave everything back, someone's not willing to go below this low. So hence, you could potentially go back up, like what happened right there. Came back down and came back up, but it took a while in order to get up there. So there's waves happening in between. It's likewise for here, it will take time to get there, but there's waves to get up in there. That's why now M1 has hierarchy. So if you go through your M3, probably the price is above the 8 of the 10 right at this point in time. Bingo. So tomorrow will be an entry to go along based on an M3 with a higher low, which will have high probability. And we will go to 50 or even 62 somewhere sometime. And this is where you can basically play out where, okay, either number one, I will close some of the positions or buy more at the end of the day. And if it goes tomorrow to 38.2, I will close some, but it will come back down as a correction, then I will buy more. Because for sure they have to retest 50, probably 62%, and this trend line right here. So you can play the game going up and down, up and down. So, but the better one would be sell some, buy more. Buy during dips, sell during peaks. Right? And that's where the difference now, like, okay, if the price goes below the 8 or not below the 10, touching the 10, then you have a higher probability because it is within the constraints of it heading to the upside. But if you're dealing with something where would be a good example right here. Here. Here's a great example. Entry point. Came back down. How do you know to re-enter? Why? Because you have one lower low, higher low, higher high. These are all minor ones. 3 uncertainty in a row where you have a lot of bullish candle, then the odds of it winning to go to the upside is more than likely to happen. And then you would be saying like, well, how about this one? Can I go long? You can, However, if you put in now your fibs, see there's another component you always have to look into. Would you mind putting a fib from there to there? 62%. Touching the 60% back below the 50, probably you're done. Okay, so here, testing that, 1, 2, and then 3, 4, 5. So it has to retest 1, 2, and 3. We already retested 3. You have gravestone diverging from a downtrend, and then going through the overall trend is also to the downtrend. So if it gets out in terms of 2 out rule, maybe the best is just to close your position and short because it could potentially drop. And this is the correction is basically over, basically. Especially if the price of a 2 out rule, and this is all now dictating that a continuation of the trend or the impulse has a higher probability rather than this is the correction of it. Impulsion, correction, correction, impulsion. So there are a lot of things to look at, right? It's not just, okay, then you need to look at the trend, you look at the price and trend, supply and demand, which one in terms of hierarchy. You cannot make your own decision just based on moving averages. It has to be
Got it. Makes sense.
Yeah.
Cool.
Yeah, because if we just keep on doing that, it wouldn't work, basically.
Yeah, it would definitely drop, or I guess it would just make it an inaccurate win-loss ratio.
Exactly. Yeah, and that's why, as an analyst, it is definitely, need to look at the loopholes. Okay, what else am I missing? Okay, I need to do this. Okay, I missed that. I need to look at this. I need to look at demand, supply, trends, price, losses or moving averages, or even stochastic, because it is the last part. So a good example would be this too. Let's clear this. Go through the tab with no indicators for me, please. Great, change that to the dollar Japanese yen. All right, so if you put in, to make it easier, even just put in the indicator tool, which gives you supply and demand trend lines. Make it easier for you. See, how can I make this as an indicator tool to sell to others? Because it's easier. Because it's a free source. Once you put it there, it's a free source, right? Okay, so look at that. Expand it a little bit more for me, please. So firstly, what is the trend?
Down from here and up in this.
Yeah, if you change the values rather than 72, put it 210. Yeah. So you can see based on the primary, secondary, tertiary. Price broke out of tertiary downtrend, correct? But at the same time, it is downtrend or uptrend?
Down.
All right, downtrend. Okay, expand. Expand it for me, please. Sorry, opposite side. Minimize it from the side. So if it's a downtrend, what is the current candle doing at this point in
time? Forming an M2, potentially.
So even before we go through M2s and M3s, the candle at this point.
Bearish.
Yeah, it's a bearish candle base followed from,
Level of supply.
oh, what is this candle right here?
From stability.
Okay, so from stability, let's just deal with price at this point in time. Stability, what does it mean in regards to price?
Sellers are meeting buyers. Buyers are meeting sellers.
So if buyers and sellers are meeting each other, there's no buying, there's no selling. What does it mean to you then as a trader or even as an analyst?
Um, that no one's willing to go past a certain price. They're waiting for something.
Okay, waiting for something, uncertainty, right? So when there's uncertainty, then all of a sudden followed by a bearish candle. What does that now mean?
Potential evening star.
So there is a, see, you're now creating a pattern, right, in terms of that. But if you're just dealing purely just on price without using the pattern, so evening star, what is an evening star? But you're just only doing from an uncertainty candle where buyers and sellers are the same because they don't know where to go. They're waiting for some news, and then all of a sudden followed by a bearish candle. What does it now mean to you as a trader or even as an analyst?
Sellers are in control.
Sellers are in control. So from an uncertainty, you now have what?
Certainty.
Certainty. So if the certainty has been established that sellers are currently coming in, buyers are stepping away in a downtrend. So what does it mean now to you as an analyst?
That it's time to sell.
Time to sell, or there's a potential that if you're going to place a bet between buying and selling, where will you place the bet?
Selling.
To the selling side, and you have a higher probability. Also, when you have a bullish candle followed by uncertainty because they don't know where to go and the price is now a level of supply, and then all of a sudden a confirmation of selling has been established. That's basically what an evening star formation is. When price at a level of supply in a downtrend, and you have a higher probability of winning to the downside. So how can you then confirm that the price has really been overbought?
Stochastics.
Exactly. So by looking at your stochastics as an oscillator, so it doesn't matter what you use. You have your stochastics, you can use RSI, momentum indicators, because even look, if you put an RSI with a default of 14, I guarantee you that's also overbought. Right? So it's also overbought, and it is sliding to the downside. So why are we using fast stochastics? Is simply because it's faster in regards to the calculation of it. That's the only reason. Plus, it's been proven. That's it. So, but if that would be the case, overbought, price at level supply, you have certainty. Then notice in regards to hierarchy, looking at price of hierarchy, and then using oscillators as mainly as a tool or as a form of looking at overbought, oversold conditions. That's basically what it's just used for. So if you're saying this, will you place a trade?
Yep.
Absolutely. So now if you put in now through your moving averages, probably the moving average is still the price still above the 8 to 10, but it will take time in order for the price to go below the 8 to 10. So now if you're dealing with this and you're saying, well, price to touch the 8 and the 10, can it potentially go further up? Potentially, absolutely. Why? Because the price still above the 8 or the 10.
Mm-hmm.
So, but it touched the 8, and then hence price will follow later on that it goes below the 8 or the 10. Then you have another entry point to go short at a retail price point. Currently, you're at a wholesale price point where your risk is minimal.
Mm-hmm.
Any questions with that, Jared?
No, sounds good.
Right? Nice. Okay. Go through a different pair for me, please. Go through the tab with no indicators. Okay, so based on what we're discussing here, or we just discussed, if you as an analyst are looking into that, what conclusion can you come up with just basing on price?
Um, Buyers are uh, heavily in demand. Demand is being created here. We're at a higher low than the prior low and holding the uptrend line or redrawing it.
Okay,
Coming up,
I want you
yeah,
first to first step. What do you need to look at?
current candle.
Current candle. What is the current candle telling?
Buyers are in control.
Buyers
Buyers
in
are.
control. Okay, but look at the acceleration of it. Is there a lot of buyers, or in regards to demand, or no?
Not really, no.
Not really, right?
Hmm.
So technically, it is a spinning top where they're just basically holding the price right there. So the question is why? And this is where you need to figure out or find out why is it not moving, not like the euro or um, why say yeah, not like say the euro for example. So why is this not moving? Then this is now where you have to go through and look at potential news. Oh, maybe the Brexit is not over yet. They're waiting for that. Maybe there's other different type of news that they're waiting for. So, but nevertheless, you have a higher low where the low of today is higher compared to the previous candle, but there's also a lower high.
Hmm.
So what is the overall trend? Well, the overall trend is up. I can see that very clearly. But there's also a lot of bearish candles with force. So if they're supporting the price in a level of demand, then definitely there is a high probability that if I'm going to buy right now with a low risk, I could potentially make all the way to 3160. Our price is about 100 pips within that downtrend and supply as a form of resistance.
Hmm.
So you have that distance. Okay, so what did I do just then? All I did was look at the current candle, create um, an objective conclusion, and what is supporting my conclusion. Maybe perhaps they're waiting for some news, Brexit or whatnot. And then I look at the lows and the highs. Okay, no one's willing to go to yesterday's low, no one's willing to go above yesterday's high. You have a higher low, you have a lower high. Prices at where? And then you're looking at it, prices at demand. What is the trend? Step 4, uptrend. Today finishes like this, then you have confirmed low. Then you have another higher low. Great. If I have a higher low based on It'll either be a minor higher low, that could be a major higher low, followed from a lower low, which is also a higher low. Then if it's a higher low, then technically next one should be a
Higher high.
exactly. Then they need to break the last high that it formed. And it has to be above 32. Then you have a potential 140 pips to the upside as a form of distance that you can make money on. Right?
Mm-hmm.
And now if you want to utilize indicators, you have no M2, but what is the indicator of oscillators dictating? And this is where you can look at it. Well, perhaps it's on the 50th percentile, or and you can just go through there, yeah. Actual fact, it's oversold. It's on the 25th percentile. Okay, look at your moving averages. It's below the 8 and the 10. So you can argue where, hey, it's still below the 8 to 10. However, it's forming a higher low. Which one will have hierarchy? Price below the moving averages or your higher low?
Higher low.
Exactly. So either it will stagnate, very similar to what happened right there in March,
Mm-hmm.
but that's coming from a higher high. And what is it telling you? From here to here, you have an entry, stagnation, create a new lower low. There's no entry to go long. There was potential one, didn't want to. After this to this, and you have a higher low. All these three here, what is it telling you in regards to the dynamics of supply and demand, Jared?
The three bullish candles.
Yeah, so from
Or
here to here to here.
that they're making pushes to the downside that aren't getting very far.
Yeah, so in other words, you're running out of sellers.
Mm-hmm.
So you're running out of sellers, and all of a sudden you have a higher low. What do you think is coming? What
Bunch
are
of
the
buyers.
that the price will go above the 8 to 10 pretty shortly?
Pretty good chance of that.
Oh, absolutely. So this lower low, it wanted to attempt to, failed, and now you have a higher low. You have a higher probability that it will go above the 10. When that happens, then you have definitely a good odd to go for the price to go above 33.50 once again, or depending on what that high is. Right, so from an M1 perspective, you have an opportunity. M3 will come in 2 to 3 times, but if you're selling based on an M3, the odds are very slim.
Mm-hmm.
Notice the difference?
Mm-hmm.
Yeah. So that's how you can dictate whether you can go back in or not. How about this
Got
one?
it.
You'll see here, you have a lot of bullish for us. Consolidation before it went up. Yeah. All right, your turn. Choose a different one.
Okay. So for the CAD, the current candle is very bearish. Yeah, a lot of sellers forming a lower high relative to the major high here, but higher low relative to this minor. In the lows here, lower low. So this one's kind of wedging, and that it's forming higher lows and forming lower highs. Overall, the bigger trend is up. So yeah, from this selling pressure, we should see these lows get broken, form that lower low from the lower high here. Volume's not really there though. So it could have a short-term correction of some kind. Should be oversold. Yeah. And then for M3s stayed underneath. So continuation of the short. Breaking out of the trend line there. So potential for this to come all the way to the 62 or lower. And that would require it to break the wedge. And then if that happens, yeah, bigger time frame, we'll have a lower high here. So we could see these lows getting broken. But overall buyers in there. So yeah, target around here is pretty high probability of being hit. Right at the uptrend. So around 3250, I'd say, is the highest. They're pretty high. Then yeah, the trend's overall up on a big term. So for it to break underneath this, it's possible, but it's going to be a lot of work. So yeah, be best to sell or hold and wait for a minor correction and then add in to sell. Yeah, from force to lack of force. But we're not really seeing sufficient buyers in it right now. It's kind of just running out of steam here through these last three. Yep, that's all I got for that one.
Oh, sorry, Jared. I was muted there for a second.
That's all good.
Okay. So now, currently, based on what you're looking at, if you're going to place a bet now, then you're going to buy or sell.
Sell.
Okay. So look at going an M3 perspective. So notice that what would have been a better time of getting in, like say because of force. Notice that force. Notice in terms of formation of majors. Imagine if you went long last week, definitely would have lost, right?
Mm-hmm.
But just because the price is above the 8 to 10 doesn't necessarily mean that it would continue to go up. So here is definitely a clear cut of a lower high breaking out. So what are the odds that they're really gonna head towards here? Back to
Pretty good.
highly probable.
Yeah, about 95%, 90%.
Exactly. So in other words, this continuation of M3, well, you have a very, look at the distance right there, it's too far. Will I really sell based on that? No, I'll wait for the correction. Correction's finished, then you have a better chance. So in other words, if this was the entry to go short and you're correcting itself, 1, 2, then this would be the sell signal. Aside from here, you have a sell, you have another sell, and then bam, your stop loss is above there. So you put a fib from top to bottom there, Jared, you'll see a clear picture. Here, all the way down. See? 62, bam.
Yeah.
So what did you learn today, Jared?
I learned that yeah, I guess reinforcing the hierarchy, yeah, like M1, M2, M3. And then yeah, when looking at the whole picture, keep that in mind. Don't confuse them. Yeah, price always rules compared to anything else. So focus on that.
Good. All right, so write it down for me, please, and I'll see you in 4 or 5 minutes time.
All right, sounds good. See you in a bit. Thanks, Ray.
No worries.